Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. A wild night for the global markets as the US dollar takes heavy casualties across the board, fuels the Australian dollar rally to a 58 high early this morning. However, we have got now a high now 64. And respecting this high that was seen in July around the resistance of 80.65. Although my view is at the moment still bearish to hold at 65, my concerns with the US dollar breaking down now does shift the outlook a little bit. A break of 65 today would give concerns of a move towards 81.40.55, with the support now seen at 80.05.10. As I mentioned, the dollar index took a very heavy hit overnight after the euro retained its bullish bias from the European Central Bank raised its growth forecast, triggering a volatile ride for the currency and triggered the US dollar decline to its lowest level in 2.5 years at 91.39 and taking out that 91.70 support. The ECB kept interest rates and its Euro 60 billion monthly bond buying program unchanged, but altered its forecast for its economic growth and inflation, pretty much like the Bank of England did. It now says it expects the Eurozone economy to grow by 2.2% in 2017, up from previous of 1.9%. The ECB also cut its inflation forecast with price growth of 1.2 next year and now expects from a down number of 1.3%. Mario Draghi did go on to say this was largely due to the recent appreciation of the euro. So with the dollar index now breaking down, it gives some concern that we could be looking at a target of 90.30.40 as it currently trades around 91.40. So that's 100 points. This would see euro potentially take out 120.60.70 and maybe go on towards a target of 121.5 to 122 and reassess from there. This current uptrend comes in now at 119.10.15 with a minor support at 119.65. Well, with the euro rallying, the dollar weakening, so has dollar yen. As you can see, the market's taken out that support at 108.30. After this morning, it did record a low of 108.09. Now this week, the yen did gain further strength earlier in the week as the tension between the US and North Korea heightened. However, in other news, China has finally come to the table after its news source said it now backs the UN to take necessary measures against North Korea's latest nuclear testing. The Chinese president has called for tougher sanctions against North Korea after he spoke by phone to the German Chancellor, Merkel. So that may put a bit of a help to the market, but nevertheless, there's still tension there. And with the key level broken at 108.30, does give scope now towards 106.75. With the immediate target coming in now at 107.80, with resistance at 108.75 to 109.30. Well, this time around, the pound has found momentum and taken the advantage with a weaker US dollar, takes out the 130.50 resistance and now looks towards 130.160 as an objective. Any pullback should find support now at 130.60 and firmer at 130.05.15. Reassess from 130.160. Although I've been sitting on the fence with gold, the market has rallied on and now looks towards a target of 1,352 to maybe 1,360. Towards that region, we could see stabs, but it's unlikely to sustain purely for the fact that we are clearly overbought. I do expect to see rejections from either 50 or 60 and look back towards the downside, which comes in immediately at 1,340 and then 33 and 26 with the uptrend at 16.18. Oil outlook took a brief pause to the downside before the rally rebounded off 48.60 and now looks towards $50 as a potential target, or even extending towards $52 a barrel and reassess from there with the technical implications, along with traders now concerned about the Hurricane Irma, which is ranked as one of the 5 most powerful Atlantic hurricanes in the past 80 years. Now it's looking to head towards Florida at this stage by the weekend, and this raises concerns and may knock out the major demand center and could cause fuel shortages. And to finish up with silver, the market is now pressuring this level of $18.10. At this stage, I am not supportive of this move to go any higher, but it could see 45. The reason why I'm not supportive of this move is the fact that the indicators are clearly overbought. The ADX is overheating, and the RSI is pushing up to the extreme side of the range. Therefore, I expect to see a pullback to either the $17.75 minor support or firmer, where the uptrend now comes in at $17.60 and reassess from there. But concerns are just purely for the fact that the market's running on a weaker US, and if we do get a rejection, do be very careful that the market can turn down very sharply. So that wraps up my daily video. Thank you very much for joining me. I hope you have a wonderful day and a wonderful start to the new weekend.